Omar Aguilar, what is your view of the stock market right now? Is it cheap, expensive, fairly valued? Where is it?
Well, we think that this stock market has started really well in the 2012. First quarter is going to be one of the best quarters since 1998. We actually think that the market still has room to grow. This is part of a normal bull market cycle that started back in 2009. I think what we have seen so far is the stocks continue to grow, earnings continue to be strong. The whole U.S. economy is catching up to the optimism in the market. And we actually see that the Federal Reserve continues to support the growth in the market. So we're still very optimistic about the equities.
Well, it seems like we have Greece solved for now, but we've been hearing some fireworks out of Spain. Could this add some volatility to the market? Can we get a bumpy ride from here on in?
Absolutely. Volatility went down to low levels. The VIX went from 40 to 14 in a matter of 8 weeks. That's unprecedented speed for volatility changes. We actually think it's normal for the volatility to come back to historical levels. In fact, we believe that it's actually healthy to actually be around 18 to 20. So we actually expect that will happen. Now, the news out of Europe will continue. The risk in Europe continue to be there. Nothing has been completely resolved. So we can actually see more of that coming into the near future.
All right, what about higher gas prices? Could this sap the strength of the rally?
It's a significant headwind. It is definitely a risk that we look at. And the challenge with oil prices, it will actually be depending on whether it's a supply-driven shock or if it's a demand-driven shock. If it's demand-driven, this is actually positive for equities. If it's actually demand, that means that we're growing. That means that we actually continue to be in a good path. If it's supply-driven, particularly if it's a shock, particularly coming out of Iran, that will actually be a problem and a significant headwind.
So for investors who want to make money in this fairly constructive market that you see, where's the best place? What's your favorite sector right now?
We actually like to look at large cap names within the US, particularly the ones that have growth. And we actually look for those that are fairly priced. Those that are actually cheaper relative to the competition in technology, they're actually pretty good. We actually like that. We actually like high quality financials. We believe that lending, have started to become a big part of this recovery, and it started back in 6 months ago. So they were not lending before, so the lending cycle started back again 6 months ago. So some of the big banks and insurance companies look pretty attractive from that point of view.
And any place that you're avoiding, where would you stay away from right now in the stock market?
Well, we think that anything that is the safe havens like they were last year, whether it's consumer staples, whether it's telecom, whether it's utilities, those are fairly expensive now. And we actually think that that's an area that we should probably watch for the next few months.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to